My name is Austin Wenzloff. I am the Senior National Sales Executive at Trellance, formerly with OnApproach, but was recently acquired by Trellance. So I will talk a little bit about that in a future slide here, but prior to that, I'd like to introduce Karan. And Karan, I'll let you introduce yourself and then kick it off.
Thanks, Austin. Hi, folks. This is Karan Bala, CEO of CU Rise. We run predictive analytics for various organizations. In fact, I have a very, very close relationship with Trellance as well, Trellance and OnApproach. I do want to thank everybody for joining. I know the title's a mouthful. Learn the keys to successful data-driven member onboarding. Basically, what we are going to talk about is how you can be better and smarter about onboarding using data analytics and data-driven strategies, all the way from organizing it better to leveraging it better. I hope many of you all, it looks like at least from the attendee list, so some of you all are doing this, and if you aren't, I strongly urge you all to do it, and we'll tell you why. So just a couple of slides to give you a background. I mean, CU Rise, we've been around for now actually working with credit unions about 7 to 8 years. Have 2 global centers, multiple successful projects, and I have worked with 50 plus credit unions. The good thing about this is that about 7 years ago when we started, analytics was a little bit of a scary word, big data, all of these words were out there. We have found now over time that mindset has changed. Things have become more accepting, and for multiple reasons, we're now able to do a lot more with credit unions as it relates to data. So we spend a lot of our time doing things like predictive modeling and actually getting into the member level information. So we do, on the data science side there, we focus a lot on omni-channel reporting, marketing campaigns, member segmentations, predictive analytics. Actually, our big focus for 2019 and 2020 is around predictive analytics. We also do a lot of work in visualization and reporting, and this is areas like business intelligence, where more and more credit unions are starting to invest. So this has been part of the evolution that I just mentioned, starting back from the time when it was that daunting piece, but the availability of data and the way to organize it in more seamless and integrated manners has facilitated more and more visualization and business intelligence across organizations. That has then led to the question about, okay, now I have intelligence on my members, what more should I do? We do analytics assessment, data discovery, and a couple other things. Happy to talk to you all anywhere after about any of that.
Yeah, and from our end on the OnApproach / Trellance side, so just to kind of, you guys might be asking the question of why are these 2 organizations presenting together. One of the important things to note is that OnApproach, prior to being Trellance, did take an equity stake in CU Rise. So we were one of their first, earlier investors in the queue. So we saw a really big need for what CU Rise brings to the table in terms of, predictive analytics and really advancing the credit union industry to the next level. So that's why these organizations, Trellance, OnApproach, now Trellance, and CU Rise are here speaking today. But just to give you a little bit of background about who we are, before we progress into the presentation. So OnApproach was founded about, back in 2005, and originally we started off doing, data warehousing projects and, different types of consulting initiatives, but we later landed on the idea of building a repeatable product for the credit union industry, and that later transitioned into what we now refer to as an industry standard data model. And I'll talk about that a little bit on a later slide here today. But the important thing to note is that we really want to be able to bring all credit unions together, working on a common platform, and not only just credit unions, but also really great partners like CU Rise, so that we can develop a platform that advances the entire industry as a whole, instead of a whole bunch of credit unions trying to figure out data and analytics on their own and working kind of in their own, disparate, data siloed world. But that leads me to the Trellance acquisition. So recently, OnApproach was acquired by Trellance. That acquisition closed a little bit less than 3 months ago. So I think our 3-month anniversary will be next week. But the marriage of the 2 companies was pretty simple. It was basically Trellance, which was formerly CSCU, got out of the payment processing business. They divested that business. They sold it to FIS, and that led them with a very healthy looking balance sheet, but also then a decision to make, which is, what do we want to do next? And they landed on data analytics. We're a QSO, we being Trellance, we're a QSO co-op structure with 2,400 credit union member owners. And we really wanted to look at the future and what can we do to benefit not only just our 2,400 credit union member owners, but also the entire industry. And analytics was the area that we landed on. So that really led down to the acquisition of OnApproach, looking at a few different options and realizing that OnApproach really had some technology that the industry could really benefit from. So the marriage is great. You have two organizations, one that's very cash rich, and then one that also was very innovative and had a great product and a very growing market, very fast growing marketplace there as well. So again, CU Rise is part of our family in the sense that we have an equity stake. They're one of our better partners, but that's why we're here today.
Yeah, and I think thanks for pointing that out. I should have mentioned it. That relationship that we built with OnApproach and now with Trellance has been critical because as sort of credit union executives and users, as you think about what you hear in the marketplace around decisions you make with providers, with vendors, there's a big push in the marketplace around platforms and services around that. And the way that's evolved is individual platforms have emerged. And this is even with core systems, digital banking. I'm sure some of you all are in contracts or looking at alternate providers. The big push, and outside of credit unions and fintechs, banks, and in credit unions now, is around experts providing what they do well. So typically you'll have either a core platform which will pull in analytics from different services or different providers, rather than your traditional cores or digital bankings or data warehouses that actually built it all themselves. So kind of pulling in, and that's why this relationship that we've had with OnApproach and Trellance has been really successful and long because of that particular reason. So we're providing expertise and we're focusing on individual expertise. So just continuing on today's presentation, obviously we digress a little bit, but it's about onboarding. Why is it important? What you need to do to start onboarding. So what are some of the prerequisites? Building a central onboarding engine, and we're calling it central onboarding engine, or we call it, basically it's finding ways to take some of your traditional conventional onboarding processes and make it a lot more automated, analytical, and really optimizing it. And then we've got some examples and best practices just for you all to take away and implement hopefully at your credit unions. So member relationships are important. I think this goes without saying. I spent a large part of my career at Capital One, and I remember, I think in the early stages, we said something like every cardholders, because at that point, Capital One was a card holding company, every cardholder brought at least $240 worth of value per year to the institution. So if you start thinking about that, that's a huge number. I mean, that was a net profit at the end of the day. I mean, we say 400 here because this is probably different products, combined products. But I mean, if you're an institution, and even if you're doing half as well, Capital One obviously went through an MOU for fees, and unlike banks, credit unions are more member focused. So even if you're generating half of that, which is $120 per member, per cardholder per year, if you got 10,000 cardholders, that's about $12 million. So you do not want to be in a position where you're losing members. And believe it or not, Austin talked about the Trellance and OnApproach 3-month time frame. We have found that 90 days and sort of 3-month early relationship that you have with a member, how vital to that. Attrition rates for new members, this is actually in the first year, I should say, first year attrition rates run between 25 to 40%. And credit unions are notorious for this. They don't see it as attrition unless a person actually calls in and closes an account. The biggest form of attrition is silent attrition. Basically, this is members that just got the card, took the bonus, or signed up for the checking account, and just didn't really do much past that. So again, onboarding is one way, and onboarding goes beyond just cross-selling services, I should say. It's about from the time the member walks in to the time that early 90 days is done, and in some institutions even 120 days. So having that deep relationship is key. You got to realize your members can choose from over 10,000 financial institutions. 5,000 of them are just credit unions. So you have about 5,000 other credit unions, community banks, banking space. I mean, there's over 10,000 institutions that credit unions that your members can choose from. So please realize member relationships, I mean, if you get them, finding ways to hold on to them are critical. And we've seen study after study say that if you actually have a strong onboarding program, you can increase your share of services or wallet share from 2.8, which is about average in banking, probably about average. I think credit unions probably a little bit higher than banking when it comes to services per household, but you can move it from an average about 60 basis points more than what it is. And so just think, we did, there's been studies done around how successful are your conventional how successful are your onboarding programs. So there was about 285 surveys done to institutions, and 66% of them felt that their onboarding programs could still improve. Now, that's one part of this particular slide. The other thing that to note here is that no one said that it was not successful. There was 13% that said it's too early to tell. And the interesting takeaway that I had out of this was that in general, everybody saw value in it. So this is going back to, obviously we're talking about a data-driven onboarding program, but even if you don't have that, just having one in place is critical. Now, conventional onboarding programs have not been hugely successful either. If you see only 4 and 16% say that was very successful or successful. Otherwise, it's mostly, not as successful as we would have hoped or moderately successful. But in general, though, the thing that this slide doesn't say is the same survey also asked about how relationships have changed. And by 2020, most of these institutions felt there was a strong push that members will be shifting. And this is banks as well. So we'll be shifting their business from the traditional banking channels. Majority of the members will be shifting that relationship from the traditional banking channels to more digital channels. So today, if your onboarding strategy or the way you reach out and engage with your members are, hey, come on into the branch, talk to my MSR, and build that relationship, just recognize the fact that in the next year, 2, 3 years, it's just a matter of time. Your members are not going to be coming in the door anymore. So they're going to be coming through alternate channels. So you better have a good plan and a good strategy around how you're going to engage with members who don't even walk in through the door. And why is onboarding important? Obviously, this goes without saying. We see huge elements of members leaving. I said 25 to 40% that will actually leave the institution before even a year is over. Big opportunity in terms of increasing revenue and decreasing costs. I mean, rather than going out and doing a lot of marketing campaigns, this allows you to be very selective, very, very targeted in how you engage your particular members. And as a result of that, we see a lot of member loyalty. We found this study after study again has shown that members are far more satisfied if they actually are onboarded better. Like I said, onboarding, of course, spans beyond just the cross-selling of services. It's about even bringing them on board with the products that they have. You do have a much better chance of being top of wallet. And I tell credit unions all the time, the amount of information that a member gives you when you're actually signing on or you're getting that initial membership is huge. I mean, you will almost never in that relationship get that kind of data again. They tell you their income, they tell you about the relationships they might have, almost you get the whole bureau data. You literally get a wealth of information at that time. And so getting them on board is very, very key, very, very early on too. And we've seen time and time this kind of a success story play out. I've got a couple of examples. I mean, Netflix is one. People think of it, once you sign on with Netflix, first of all, they have one product. I mean, you can get multiple sort of, different number of screens and stuff, but by and large, their product offering is one thing. So you would think that once a customer member signs on, they don't necessarily need to do anything after that. But the reality is that they've really focused on the early 30 days, early 90-day program, so much so that you can watch it free for 30 days. I think there's even a program now where you don't have to give a credit card. So at 7 or 8 days, you can take 7 days without even giving a card, and they let you do that because they're that confident in their onboarding program. 91% of people who use these kind of services love them. The biggest thing, and just think about it, people log on, you can go on your phone, on your iPad, on your laptop, you just enter a couple of different variables, a name, address, email, a credit card, and boom, you're in. I mean, you can get that rich. So very, very quick and seamless. They compare that to the member process, right? If somebody comes in, the paperwork involved, more often than not, sometimes, there's the waiting process to get approved for loans, the repeated interaction, sometimes the manual versus automated processes. I mean, they have taken that out. They said, no, let's be very, very simple. Let's figure out what our consumers really, really want. Very clear instructions. And then they do spend a lot of time with that onboarding personalization because they recognize that member attrition would be a huge impact on their revenue. So they're constantly thinking about how we can personalize services for this particular user. how we can make recommendations around that. So Netflix has done a fantastic job with that. And there's companies that you wouldn't think about that have also done similar things. I mean, Nike, this is a company that started off with shoes, makes t-shirts and pants, or track pants. But if you have an Apple phone, if you have an iWatch, or even an Android, they've really started promoting their app, and it's interesting. And as soon as you get it, they're tracking your steps. They encourage activities. So they have found things that will then help you better use the products that they have. It's been wildly successful. Nike's sales as a result of their app usage is up substantially. Similarly, IKEA. If the moment you sign on for IKEA's program, again, very easy to sign on. But one of the things they try to get you, they have this augmented reality app. You can take a picture of your house. Actually, you see that little picture moving on there on the left. You can take a picture of your room, and then virtually place anything in there. So now, the ongoing relationship, right? So you've signed on for this IKEA rewards or IKEA family membership. You get the app, and almost instantly you're able to try out furniture in your house. So tomorrow, and I have this app, and recently, I mean, I've had this app probably for about a year and a half or so. Recently, I was thinking about changing the sofa that I had. I didn't even have to go into the store. So automatically, the first app that I opened up was IKEA's. There's a lot of companies out there that sell services, sell sofas. Similar to the fact that there's a lot of institutions that offer the products that you offer. However, because I had that, I was brought on. I think I was onboarded pretty easily and pretty early on. That the moment I think about making any kind of a change, just think about what that does for your financial institution. If the moment I think about getting a new car, or even thinking about getting a new car, or getting an auto loan, or a new credit card, or I'm even wondering what card would be there out there that actually gives me really good rewards for my kind of purchase. Any of those questions, if I can just hop onto your app, does your app do that? And that is the marketplace that if you're not playing in today, you will be playing in very soon, because fintechs are bringing that kind of functionality out there. There are providers that even within the credit union space that have a lot of integrated, like I was talking about, the platform analytics that are allowing your members to see this. So this is obviously happening in the banking space, it's happening in the retail space, and it really should be happening in the credit union space, because let's face it, I mean, one of the big challenges many credit unions have is around diminishing, well, growth in membership so far, but we are seeing an aging membership come in. And I've seen some very interesting stats on things like 75% of teenagers have never even heard of credit unions. So your inflow of membership is not going to continue at the same rate. You really need to find ways to capitalize on those relationships, deepen those relationships early on, and to keep it that way. And this is true, by the way, this is not just my opinion. It is my opinion, but it's not only my opinion. This has been something that we've heard and seen repeatedly. I mean, KPMG, each one of these companies probably has more employees than second, third largest credit union. So these are big companies we're talking about here. Onboarding has been viewed as a back office function. I mean, KPMG says that they've decided to make a technology-driven approach to logical onboarding. It's very important for your customers to see onboarding as a single process. This is another thing that I think credit unions really need to start thinking about, because again, your competition is thinking about it, is how do you make the new product onboarding? So getting that member, making them feel at home, all the way to getting a new product, if they get one, feel completely seamless. So how do you make sure all of those interactions are seamless? So if they walk out of the branch after talking to an MSR and they open up your app, it says, hey, so it was great that you talked to John at the branch. Is there anything else we can follow up with? So making that kind of a seamless experience. Accenture says, I really like Cognizant's post, which basically says that banks are shifting away from proprietary trading towards a flow business. The products that you had were, if you go back and say you're a particular seg-based credit union, so, say you're a seg-based credit union, well, you pretty much had sort of that single advantage. Everybody in that institution oftentimes had limited options to where they could bank, and that's how that seg relationship came about. It was a way that those members could actually build that financial stability. The reality is, again, the market has moved so much now that the products that you were offering, unless they're super competitive or just fantastic, they're not so much, they're becoming a little bit more of a commodity product. So how do you ensure you have to have focus on that member experience? The flow business basically is what they're talking about, which is finding ways for people to be really, for it to be seamless. This is something that I ask credit unions oftentimes when I go out and talk. I say, where are you on the member-centric grid? And everybody says, and I'm sure in your institutions, you also are talking about the fact that we are very member focused. But the reality of it is that, and focus is basically we've got regular sales activities. We reach out to our members. Driven is when you start actually getting feedback from your members to make changes to your products. Credit unions are starting to do this, and this has helped attrition. It has also helped in enhancing the products that you have, but really haven't got to the point of, so most credit unions are roughly about here, which haven't got to the point of being really engaged about finding ways to invest in that long-term relationship and proactively researching what your members are trying to accomplish. And that's when you become extremely member-centric, and the relationship benefit, and we've seen that. I mean, credit unions continue to have a much stronger, deeper relationships than banks because of the personalized service. But technology has changed that. So you have to find ways to get to the upper two areas of the member-centric grid. And one way you can do that is by undertaking a really successful onboarding measure to help you climb up that grid. And just kind of speaking about the member life cycle. So onboarding is just one piece of it. I don't want to. Onboarding really falls in that second bucket here, probably a little bit on the left as well in the early acquisition. But acquisitions is when you're going out and trying to find ways, your marketing, your brand presence, your TV ads, if you do any, your direct mails, email channels to get new members in the door. That's when you're acquiring a member for the first time, or in some cases acquiring a new product with an existing member. So that's the acquisition side. You then have the early onboarding part, which I literally think of as the first 90 days. This is when you are talking to your members the most. They love you because they made a decision to come on board. They want to feel good about their decision. It's what, the honeymoon period. First 90 days is you can almost do no wrong. You can even make mistakes, and by and large, you'd get away with it. And then, of course, you have to find ways to continue to engage with your members. You need to find ways to reboard your members, which is an ongoing assessment of what your members' needs might be. And then you need to manage attrition. So I'll just kind of stop there. I mean, Austin, I've said a lot, but you've spent quite a bit of time in terms of finding ways to organize data and sort of how it fits into this. Do you want something to add to it?
You covered a lot of it there, but I think it's important just to note that, and we'll talk a little bit about this in further slides too. But when you're thinking about the member's experience in the onboarding process, I think a lot of people neglect the fact or don't look at all of the complexities underneath that in terms of different databases and what's all getting captured in your credit union. So for example, a member might join the credit union, they might open up their membership, and that might be recorded in the core system. But then they also might have opened up a credit card account that's outside of the core, and that new card opening doesn't get fed into the core. So we don't know, if we're just looking at core data, if that member actually has a credit card. So an onboarding process without that data, without that flow and that connection of all of the data there, is going to run into a lot of friction, because you might pick up the phone or send a mailer or whatever you're going to do to interact with that member, and you might say, hey John Doe member, thanks for becoming a member with our credit union. Really excited to have you on board. By the way, would you be interested in a credit card? And that immediately is going to set them off and say, why would they offer me a credit card account when I literally just came into the branch or went onto the mobile device or online to open a membership so that I could open a credit card? But you won't have that whole picture completed with a lot of what we're seeing in credit unions today, because there's so many different disparate data sources. And again, there's a lack of data integration and a lack of automation that goes into an onboarding process. So that's one thing to add on to that. I think you're going to talk more about that, Karan, but I just wanted to throw that in there.
Yeah, but I think you couldn't emphasize it enough. I mean, this has happened. I mean, I have a relationship at a credit union. I've done something at the branch, walked out, and had somebody, maybe not necessarily the same day, but within 2 or 3 days, reach out and say, hey, wanted to see how your service was. Are you interested in one of our other products? Are you interested in, say, a credit card? When I'd actually gone in and done that same kind of conversation. So that seamless flow of data doesn't exist. And with the evolution of channels, that's become more and more key. I mean, you have to be able to have not only that seamless data flow through, and had to be real time, almost real time, but also have it be from channel to channel, it be able to pass through, and so all the channels kind of use off the same data source. And like Austin said, we'll talk a little bit more about that. One of the things before we even get into the onboarding, I think I always encourage credit unions to sort of think about what is a strong pre-relationship plan, and this is just sort of preparation before you roll out onboarding, but this might be even good preparation in general to understand your membership. So recognize the financial needs of the target membership you're going after. Consider what other competition is out there. I find that credit unions do that, and they do that only typically when they're making product changes, or they're basically trying to make their auto loans more competitive. So they'll do a quick research around what kind of what other things are out there. Very few times do credit unions actually look at what are the other things that banks and credit unions are doing to draw membership in there, getting new members. How can they be really creative about it? Credit unions are creative by themselves, but doing that comparative study is extremely valuable. Research products and features. This is something that we help a lot of credit unions with, especially in the areas of introducing new products or changing products, understanding what features are valuable. Look at what people use. Look at what your membership is using. So understanding that pre-purchase process really helps. I mean, there are a lot of other questions I have. What are your members' personas? What interactions do they value? What are their unmet needs? These are things that very oftentimes they're not going to tell you directly. You really do either have to have very deep relationships and good surveys, and or have really good data analytics to be able to understand that. So some of this can come from business intelligence or reporting. Understand what interactions they value. What do they value the most? How do they use their services? What signs are their actions telling you, as opposed to what you think they're telling you? And then get into the whole onboarding about engaging, joining, and growing. So, onboarding begins really, truly, as it says on the right, even before an account is opened. And there's a bit of a pre-assessment checklist that you can do before revamping your process. And this assumes that you already have a process in place, but do some studies on what does it cost to acquire a member. I mean, this is something that I know many credit unions do direct mail strategy. Some of you are dropping mails and look at just in general campaign, high-level campaign ROI, but do a study on what it actually takes to get a member. Figure out what your activation and attrition rates are. I would tie attrition success measures. On the second point, I'm still saying tie your onboarding success measures to activation of product. Credit union members will take on, we've seen typically by around the 4th week, you've got about 92 to 95%, 92, 94% activation on your products. If you have anything below that, you should be reaching out to the members and saying, hey, you got an auto loan with us, or we have pre-approved you for an auto loan. You came in, you talked about it, but you haven't got the car. Or, you came for a mortgage, we've approved you again, where are you with this? Or you got a credit card, we even sent it to you, or a direct bank or a deposit relationship, but we don't see any activity on it. You don't want to say I don't see any activity, but you just want to make sure that you're using the product that you have. So really find ways to get that early activation done. Again, I don't want to get into studies and stats, but the reality again is that early activation is a key indicator of the length of the relationship that member is going to have with you. Look at current average time taken and member satisfaction. Time taken, I know a lot of y'all look from an operational standpoint and are starting to look at this more. Days between approved to funded, those kind of things. And look at that. What are the channels available for new accounts? This is key. Making that, this goes back to a little bit about what Austin was saying around seamless data, but also about seamless interactions. Find what are the channels that people can use. People can use computers, mobile, in branch. They should be able to use a mix of this. I can go online and apply for a Capital One card literally in under a minute and be approved and even get my number. So they don't obviously have the issue around getting membership, but credit unions can do that. You have to find ways to make it completely painless for your members, because if it isn't, then I'm starting off with a little bit of a headache. Now, true, your service may eventually get me over it, but the reality is that it has made life a little bit harder than it would have otherwise. So today it may not have been an issue because there's certain generations that are used to putting that effort in, but a lot of the younger generations are not so much. I mean, I heard recently that 50% of member households have children who are not members. So, and are members at other institutions. Not just they're not members because they're minors, but they basically have either saving accounts or relationships at other institutions. That just tells you that 50% of your members have chosen to let their children have relationships and other FIs. they probably obviously have a relationship with other FI too. So just again, realize that you need to find ways. Fintechs are changing the game. That's the kind of data analysis we bring. And then make sure there's not a lot of bottlenecks. Austin, I mean, you guys run into bottlenecks all the time, right?
Yeah, definitely. I think it partly goes with what I said in the last slide, which is really about the automation piece of this and also the data piece of it. So I think data integration is key, but having data integrated without an automated onboarding process is really not going to help you a lot. You're not going to expect someone in IT or someone in lending or new membership growth, whatever that area is. You're not going to expect them to log into a data warehouse to write a custom script when a new member joins to then figure out what to recommend to them. There has to be some sort of automation piece that comes into play. And I think that's where we see a lot of the bottlenecks here is that, for one, a lot of credit unions don't have fully integrated data, or if they do have a data model or a data warehouse, it might not be architected or set up in a way where it's ready to kick off the automated process. And then the other thing too is that one of the bottlenecks is to your point earlier, Karan, is capturing the right metrics that are important for that onboarding process. So like you just used the example of channels, that's an extremely important attribute to know, because if a member logged into our website, they opened up a credit card online, they never once came into the branch, they never once called into our call center, they don't want to necessarily talk to a human being, we shouldn't expect to bring them into the branch. That should not be a part of our onboarding process. So there's certain different pieces in there that sometimes get neglected of having a very specialized and individualized onboarding process based off the data we collect. So I'd say bottlenecks are data integration's one, but that's one minor piece. Then it's also the automation of it, but also having the right business rules and collecting the right data in order to be able to ask and answer the questions that fulfill those business rules within the onboarding process.
No, also actually, that's a good point that I didn't touch on. Also, just to add to it, if a member is, every time you send them an email, they respond, but if you call them, they don't respond. And this has happened 4 or 5 times. You send them letters, they don't respond, but they only respond to emails. Well, maybe that member is telling you a little bit about how they want to be engaged with. So again, not saying you should necessarily give up on an alternate or a backup member interaction model with that member, but recognize that their primary channel might be emails. They might be that might be what they prefer. Whether it's the app, again, just thinking about how you capture that information and how you start using it to better serve the members is key. So some of the pitfalls that you when you develop a new or revamp your onboarding plan, unclear onboarding goals. So not really being realistic about what you're going to expect or what exactly you're hoping to accomplish. The next two are kind of, I guess, two edges of the sword, right? I mean, is either you consider your member too many as numbers. This just look completely from a very mathematical sort of, just look at them as purely as numbers. That obviously isn't the best way to do it. And the flip side is making too many assumptions about your members isn't necessarily the best thing to do. So when you combine the two, you do use your data, you use the numbers that you have, as well as sort of not make too many assumptions. You can start painting a much more holistic picture of that particular member. And then there's disjointed rather than seamless process. I mean, today things continue to be disjointed. I don't have to belabor that point. You'll already know that. But where there are ways, a lot of these things can be made seamless, and a lot of y'all are making a lot of headway in that. And then not using data science. I mean, just in terms of evaluation of your onboarding program, or evaluating your campaigns, evaluating your acquisition strategies. I mean, that's just one part of it, an evaluation side. But even right there, what you learn from those are critical. So that's where data science can come in, or data analytics can come in, is actually just helping you do that. Now, obviously, we haven't even got into how you can use predictive modeling or true sort of onboarding engines, which we'll talk about next, into actually making those decisions. So what does a good onboarding process look like? I mean, obviously you have the welcome aboard. This is where you feel where the members are coming on board. They know what to expect. Things are great, right? Provide a guide, sort of offer them a map. So help them not only understand where they are, guide to what they've taken on, but provide them a map of where things will go. And there's different ways you can do that. And then look for ways to increase that engagement. So all of these fall under, the cross-sell is really only the fourth one, sort of the third and fourth one, I would say. where you're telling them more about other products, features, reminding them of the products that they have, and finding ways to take that and creating that 90-day onboarding plan. And if you notice, one key word in this whole thing is create a 90-day onboarding personalized plan. That is one big shift we've seen in the market when it comes to onboarding processes. Traditionally, it was very, very set. At the 1 week mark, I'm going to do a phone call. On the 2 week mark, or 1 week, we're going to send a letter, the welcome pack. The 2 week mark, we're going to send a letter. And so it was very structured. What we've seen in the marketplace happen is it's become very dynamic in nature, which means that it can be whatever the member wants it to be, or whatever you think is the best way to engage with that member. And that's part of what data is bringing in there too. This is sort of how you operationalize it. And by the way, I know there's a lot of content in here that we're trying to cover. We will be sharing sort of a way for you to get the recording of this webinar if you want to look at it too. But just realize, there's a whole defining the objective, which is understanding what you want from your onboarding process. And the second part, Austin, this is right up your wheelhouse, which is the whole standard data structure, single source of truth. Do you want to just touch on that?
Yeah, definitely. There's another slide here that I'll cover it a little bit more in depth here, but it's really about what I just described earlier, which is that data integration piece. If you don't have a complete understanding of what's happening in that member's journey with you, getting that holistic view of that member, you're going to have a really hard time onboarding them because you don't understand them. If you can't look at all of the data in one spot, you don't really get the complete picture of that member's financial journey with you. So you're going to run into those issues that Karan and I were talking about earlier, where you might be recommending the wrong thing, or you might be recommending the thing that they actually just got with you, and it's going to really break down that trust element that you're trying to build with them. So you have to have all your data in one spot before you can start to make assumptions and do your data analysis to make better predictions for what we should be talking to that member about. If we don't have that data in one spot, it's going to make everything kind of break down, and it might actually be more harmful to do a bad onboarding process where we're sending the wrong information or conflicting with what they already have done with us versus doing it right. So that data integration piece is extremely important there.
Yeah, absolutely. And so that's where whenever we talk about what is the whole process of going from zero to fully onboarded, or at least having a good onboarding process, that point number 2 around establishing that standard data structure, making sure that your data is, that all of y'all are looking at that same data set, that you have the right environment. I mean, whether it's SQL servers, whether it's whatever it is, whether you have the right data warehouse, whether you've got the right tools in place to actually do this kind of an onboarding freeze. And then, moving on, I mean, it's the whole part about, do you have your backend developed? Do you have the right reports? Are you getting the right intelligence out of this? So this is all pre-work, really, before. This is not the actual member engagement part, but this is what are the steps behind the scenes. How do you operationalize just having a plan in place to convert that and make it into something that's workable? Making sure that part 4 is key, because it's basically making sure that you're able to export the results to the stakeholders. And what I mean by this is, whether it's communication channel, whether it's senior management, whatever it might be, communication channels would be, say you wanted to, part of your onboarding process is this particular member is going to get an email. Well, that seamless piece happens. The more manual part, in fact, there was a study recently done around the current marketing process, and it was said that it's highly manual, and 70% of the work that's done is basically in monthly awareness campaigns, which means this is stuff that we do every month, but we're spending 70% of our time redoing the same thing every month. And that's exactly what we're trying to do here. In onboarding processes that exist, I've seen a lot of times that particular person, that credit union, will say, okay, fine, let me look at the list of new members. Okay, it's been 2 weeks, let me send a file over there. I mean, all of these things can be done automated. I mean, technology allows it to happen. Having strong data warehouse like an M360 type platform, organized data set. I mean, and a seamless flow of data from your LOS, because this is new acquisitions coming in, can all lead to having that piece automated, which I would strongly encourage you all to have. And then, of course, where you're using third-party material marketing, etc., exporting it to the vendors, right? Making sure that you have that, and then making sure you have performance tracking and enhancements in place. Now, this is about reviewing the process. In fact, I've already got a question that popped up here around the performance of onboarding. How do you review the performance? And I'll answer that at the end. But just in general, I mean, this is around performance tracking, making sure that your onboarding process is working. By the way, that study that I just referenced around what marketing, how marketing is spending their time, it was existing today. About 70% of that time goes into monthly awareness. Basically, this is, like I said, repeatable work that's being done. I do a sort of an auto loan email every campaign every month, and that takes up some of my time. So adding up all of those redundant tasks comes to about 70%. Only about 5 to 7% is actually spent on things like events and triggers, and about 20% or so is being spent on targeted campaigns. So this is, let me better understand my members. And the truth of it is that that's where you'll really need to be spending that 70%. A lot of that automated stuff, or the sort of repeatable stuff, should be automated. Maybe it goes down from 70%, it should go down to something like a 10%, where you actually have folks that are, where it's a lot more automated. And the same goes for the onboarding, but that only does come with spending time and effort to operationalize things the right way. So when do you communicate? This is a question we get asked again. I mean, do you, when do I do something in week 1, week 2, week 30, day 30, day 90? It should be dynamic, data driven. I mean, even ask the members when they come into the branch. I mean, if you have a relationship at that point, the person's walked in, they've opened a product, they've already there. Like I said, this is the honeymoon period. Have your MSR, your front end person, ask them, listen, we want to, over the next 3 months, we want to find a way to continue to inform you about this product, share features of our credit union, so you are fully aware about what's the relationship that you're starting here, and you're integrated with us. How would you like it to be? Make it highly dynamic. I mean, that MSR should be able to fill it into either a file or some kind of a way where it feeds into your systems and it's just done at that point. You don't have to think so much about it. And you can have dashboards that remind people, and I'll show you an example of one of them when we get to that. And what do you communicate? So one is sort of, when do you communicate, or how do you communicate? When do you communicate? And what do you communicate? So what comes back to, ask them again, finding members. By the way, we've also seen studies where members have said what they want and less than 50% actually want that. In fact, I think it was less than 40% that actually wanted that product. So they said that just either to get out of the office, or to move on, or they weren't really sure at the time. And to counter that, cross-sell engines that are predictive sort of next best product are more successful in predicting what the member wants than what the member has said themselves. So kind of interesting how sometimes what people say isn't really what they mean, but find ways to do that, help them set it up, identify their needs. Again, I said earlier, the amount of data that you've gotten at that point is immensely valuable. It's quite a bit of information that the member's given you. And you can ask a lot more information at that point too, just kind of understanding demographic, behavioral information. How do you use your card? What are the sort of preferences you have? Capture those things in there that you can use to make onboarding decisions. Develop a cross-sell model. This is something that obviously at CU Rise we put in. We're all about predictive models. We're all about data analytics. This is an area that we really think about taking that information. So now that member's given you all that information, how do you take it and come up with either member profiles or sort of models based on that, or next best action? We've talked a lot about in the past around next best product, and we continue to have products around that. But what is the next best action I should take to engage with this member? And then how do you communicate that?
Hey, Karan, can I add one thing on the last slide there? I just wanted to throw out something too, is that we do talk a lot about products and services and what should we be getting into the members' hands within that 30 to 90 day time frame. But I think one thing to consider too, as Karan mentioned at the very beginning of this, there's a lot of noise in that member's life. There's 10,000 plus different financial institutions that they can do business with. So one of the things that we should be considering is not only what products and services can we get into that member, but what advice, what guidance, what assistance can we give in their life? Because that's how you build trust and you build loyalty when you're doing something for them where you don't necessarily have a direct benefit outcome like a new product being opened by that member. You're not going to get new revenue or new income from giving them an article or some sort of call or some free advice session about financial planning or new auto loans or whatever, or new auto purchasing process, whatever it might be. So yes, products and services are a key, and it's something we want to do is make sure we get as many as possible. But giving advice away too is something that's going to keep those members coming back, saying, hey, I really appreciate what that credit union did for me when I came on board, even though they weren't trying to sell me anything, they were trying to help me out. So.
Well, and we talked about that whole member-centric organization, right? I mean, and we credit unions are definitely higher than most other institutions, right? But that's where that whole engagement, understand what they want, what is their long-term goals, how can you truly help them? Having those conversations will automatically lead to a much more fulfilling onboarding experience for your members. So yeah, definitely taking that information with them. Train your front-end staff differently. Have them start understanding the value of data, understand the value of listening, and capturing this. And if they can't do it, then factor it in a way that they can be captured, that they can be guided to do it. So this is just a sample example, where you reach out, use ways to, if you see on the top, you got a phone call in the first week, sort of an app-based message, whether, and then really what the question mark around what happens at the 30 and 90 days. And this is where we think having something around a cross-sell model, or an engagement model, a next best action model, will help you. But one thing that we do get asked is, how do you really measure how effective an onboarding campaign is? And use measures like A/B testing. This is obviously talking about the channels, but in general, this A/B testing means trying different things sort of at the same time. So what you do is you have control groups and challenger groups. So basically, your challenge control group is a group that you follow with your regular process that you have in place. And the majority of the members will flow through the challenge group, which is your new process. And you can compare the performance of the two. And that's done, by the way, not only for onboarding, but that's done for marketing campaigns, that's done for risk assessments. I think at Capital One, we did that pretty much for any and all things. We even did that for HR. So you'll hear about A/B testing. You've probably already heard about it. This is something that happens, and it's a really good way to see the effectiveness of a campaign. It's also a really good way to determine what members are truly trying to use. So what is the optimal channel for this particular member? And then use that right omni-channel mix. And this is something that Austin talked about too. If that person likes to call in, if the person likes to only open their emails, then make sure that that's what we're doing for that particular member. And then centralize the process to eliminate the redundancy. This is tied partially to data, partially to process. Find ways that you can centralize certain things, that activity, that engagement, whether it's to a CRM, whether it's to a data warehouse, because a lot of the data warehouses actually have the capability to do a lot of what the traditional CRMs have done. And then, one of the ways you can streamline this process, and this is just an example again, in a tool that we work with some credit unions around, it's called Onboarding Optimizer. It's a welcome kit, phone piece. I mean, this is obviously the credit union's own communications that go out. And then in the second part, basically guides you to provide existing processes, services, benefits of these, basically. And I've given the example, this is an example, bill pay setup. So if this person's got a savings or checking product with you, encourage them to set up bill pay. Even on a credit card, you can encourage them to set up bill pay to use it to pay off some of the bills that they have on a monthly basis. We've seen time and time again, similar to direct deposit, bill pay also is a strong indicator of loyalty. So you understand those things and understand what you want to encourage, because like in the first 30 days and 90 days, the member will do what you ask them to do in most cases. So if you can build that loyalty early on, find ways to do that. And in that 30 to 90 day time frame, at that point, it becomes truly about automating things, finding ways to have cross-sell engines that are taking the decision making out of a manual process into a more automated, thought-through, data-driven process. And the benefits of using analytics from onboarding, I mean, this is just a few of them. Obviously, there's the profit angle of it. The more relationships you have, the more engagement, the more profit you can get of those particular products. You can have a higher services per household. It also creates long-term relationships, engagement, goodwill. I think this would be belaboring the point if I went down that list. But one thing that it is we have seen a lot of impact on early onboarding to attrition downstream. So obviously that doesn't mean you need to stop doing your attrition strategies or your retention strategies, but it really does mean that if you focus on the upfront effort of a member, and this is true, by the way, also for employees, the same kind of analysis has been done on employees. If more time is spent upfront in training them, engaging with them, that does move things down and have a longer term relationship for that particular member, for that particular employee downstream too. So just a couple of quick examples to talk about. Austin, do you want to talk about sort of the data structure?
Sure. Yeah, I think I won't get into too much detail about this because it's kind of more of a technical diagram of something that we use for our solution, which is the OnApproach M360 data platform. But one thing to just think about when you look at the complexity of this diagram, this is our way of explaining the credit unions, kind of the data integration and the automation that goes into what we do. But think about your members' financial journey or your members' initial onboarding process with you. Their data could fall into any of these different systems down at the bottom. It could be in your core, it could be in your LOS, it could be in a credit card system, a whole variety of these different systems. So without that data integration, without that middle piece, which obviously in this example is the OnApproach M360 data model, you can't really build the automated process and the onboarding process that Karan has been talking about, because there's just way too many complexities, way too many nuances with the different data sets, with the different products, with the different services. So what you end up happening is if you don't have this true holistic view of your data, you start to get into making guesses and making assumptions about what we should be doing. So, Karan will talk more about the next best product, but I always use that as a great example. A lot of times we use, and this isn't necessarily the exact same with onboarding, but a lot of times we just say from a marketing campaign perspective, March is new auto loan month. So we just decided that everybody in our membership in March is going to get a new auto loan. As Karan will discuss more, we're now using things like next best product. So instead of saying everybody gets an auto loan offer this month, we're now looking at the precise data that comes along with that member. And within this depiction here, this diagram that you're seeing, that data could be coming from a variety of different sources in a variety of different formats, which makes that process really, really challenging. So it is important that you look at that, that holistic view of the enterprise and all of the data that comes along with it. How do we get that into one single source of truth like we discussed earlier? And then how do we build all the automated feeds off that where it becomes really seamless and frictionless for that member in that onboarding process? So that's really, that's where we play into the universe of this. And then Karan, obviously you can continue going with some of your examples, but the top pieces, those automations, the predictive models, the things that come next, are all connected, but it's all one continuous automated flow that rolls into it.
That's exactly right. I think that finding ways to make things as seamless as automated for not only your members but also the folks who are trying to do this. Having that 1.9% auto loan that you rolled out in the first quarter. If you've been doing it and you intend to keep doing it, sure, you can apply data science and you can make it better, but you can also automate the process so it doesn't feel like a 3-month or 2-month project every time it's done. So just to give you some examples, and I'm going to move through this pretty quick because I realize we're running close to the hour. This is an example of sort of an output that goes out to a particular credit union. The important thing here, if you see on the right-hand side, it says contact 7, investment offer, on contact 8, insurance offer. Basically, it applies a certain logic behind the scenes, runs through an engine, and for this particular credit union, automatically passes on this information to their marketing vendor with that next communication. So they literally don't have to do anything. And this credit union is about 300 million in assets, so it's not a huge. It falls roughly around mid-range credit union, but a tremendous opportunity to automate things. And that is even more important if you're a size or sort of have size restrictions. You don't have the resources to find ways to streamline that. The product propensity that Austin talked about, basically, this is the next best product. Looking at all that information that you get early on to make those kind of decisions, to sort of feature that member relationships, performance, transactions, combining that with the data you just got on either the new product and next best products. And at this point, I'll just give you a couple more examples here and then we'll stop. I took 2 examples. Zion Bank is good because they have also extremely loyal consumer base. So it's similar to credit unions in that regard, that they have that same element of loyalty that comes from that we see in credit unions. And they basically they wanted to find ways to optimize their multiple channels and make things very, very customized. And they've done that. And as a result of that, they said they had 6x return on their investment. Their retention rate has exceeded 96%. So think back to that whole 25 to 40%, and this is after 1 year. 25% to 40% of members will try it in the first year. They have a 96% retention rate. Huge, huge impact. And then, of course, they are a large institution. They've raised deposits of more than 50 million during a 7-month period. The bottom example is basically for a credit union that was looking to find ways to automate their processes. They actually found that their onboarding for manual cases took a really long time, and majority of their cases were manual. So basically, they went from 703 cases. They applied a similar kind of onboarding process, made it very, very focused on engaging with their consumers, increase revenue, reduce the cost, reduce the cycle time from 45 days down to 17, and then reduce the number of cases. So I'll stop there. There are some best practices: acquire the right members, plan onboarding for new and old members. So reboard your older members, onboard your newer members. Collect all the data that you can get from day one. Cannot emphasize this. I mean, there's a solution like M360 which allows you to house it. Don't think that too much data is too much. Make sure you're getting as much information as you can. Communicate often and early, highly personalized, make it dynamic, highly personalized, engage them before cross-selling. And this is a point that's come up repeatedly. More often than not, when we think of onboarding, that's about offering them a new product. Studies again are showing now that if you engage and get them to be comfortable with what they've purchased, what relationship they've built, or what loan they've taken, whatever service they've taken from you, get them really comfortable with that, and then automatically you will find that they will be more open to other products. So engage them before and test and learn. I mean, do this again and again. Make sure you are learning along the way. So we'll just take a couple of questions, given the time.
I know we're running short on time here, so you do have my phone number there. You have Karan's phone number. You also have our email addresses on the screen. So if there's a question that we won't probably have time to, given we're about at the top of the hour here, please feel free to email one of us or both of us, and we will work on getting you any of your questions answered. Also, encourage you guys to look at CU Rise in more detail. Same goes for the Trellance and the OnApproach M360 offering. So if there's anything that you guys want to talk about in the next couple of weeks here, please feel free to reach out to us, not only just about the questions that might be specific to onboarding in this webinar, but anything data analytics in general, or anything company specific for the two organizations. So Karan, I can let you wrap it up too, but I just want to thank everybody for their time today, and we appreciate you taking your time out of your busy day to attend this session with us.
Yeah, I want to thank everybody too. We do have a link for feedback. This allows us to determine what content to continue to create. Both Trellance and CU Rise are committed to really focus around training and education. So please take that survey if you can. And I'll answer. It looks like we've got a couple of questions, so I'll take a stab at one just because of the time. And the first question is: right now our focus is more around acquisitions. Should we shift it to onboarding? And that's really an apples and oranges question. I mean, these are two different things. If you're not getting members in the door, you're not going to necessarily have to worry about an onboarding program. So just keep that in mind. I mean, they both are important. On the flip side of it, if you aren't taking care of the members when you walk in, you're not going to have to, they're not going to stick around. It's like, should I open the restaurant on time or should I have good food? I think they both have to be done. This is not a choice question. And then how do you measure the impact? I mean, we've talked about already in the presentation, and we'll be happy to share a recording for it. So again, thank you very much for joining. I do appreciate everybody's time in the middle of your day. And if you have any questions, Austin and I are always available to answer them.
Yeah, one last thing to add too is that we will be attending the Analytics and Financial Innovation Conference in June, which has been going on for about 5 years now, hosted in Minneapolis, Minnesota. So all things analytics, all things innovation, highly recommend the conference. We started about 5 years ago kind of as a user group. It's quickly spun off from that, and it's turned into more of an industry conference about all things analytics and innovation. So check that out. The website is axficonference.com, so you can take a look at the agenda. We have a great lineup this year for everybody's presenting. Register and also reach out to us if you have any questions specific to that either. But I'll echo what Karan said. We can wrap it up now, but thank you all for taking the time out of your busy day to join us. And again, please reach out to us at either the contact informations listed above there.